Hey everyone, and welcome back for another deep dive with us today.
Looking forward to this one.
We're going to be talking about cyber risk
Yeah, this is
and cyber insurance modeling.
a big one.
Specifically, some of the challenges that these models face.
Yeah, and it's
And especially
a pretty timely topic.
in light of,
For sure.
events like the Sony Pictures Entertainment hack back in 2014.
Mm-hmm.
And we have some really dense material to go over today.
You do.
But I think it'll be a really interesting conversation.
Absolutely.
So we're looking at excerpts from Dr. Yogesh Malhotra's
Okay.
postdoctoral thesis.
Mm-hmm.
Um,
I'm familiar with his work.
yeah, so this is on quantitative finance
Okay.
behind cyber insurance models.
Yeah.
So
This should be good.
our mission today is to help you understand
Right.
why cyber risk is so different
Yeah.
from traditional financial risk.
Why it's so hard.
And what makes it so difficult to model.
Yeah.
And I think that's crucial. It
Yeah.
is.
For understanding.
And it's not just about
not only
the complexities of cyber insurance,
right.
but
Yeah.
also, the broader challenges.
Yeah,
of
the
it.
whole landscape.
Assessing and managing cyber risk
Cyber risk.
in our increasingly interconnected world.
Absolutely.
Yeah.
It's a big one.
Yeah. So let's start with that Sony Pictures Entertainment hack.
Okay.
Back in 2014,
Right.
it wasn't just about data theft. It
Yeah.
was
Right. It was about data
data destruction,
destruction.
which is a key
Yeah.
differentiator.
Huge difference.
And the FBI
And the FBI even said at the time
even assessed
that cyber threats were one of the
that cyber threats were one of
gravest national security dangers to the U.S.
the biggest dangers to
Yeah.
national security.
Excessive?
Um,
Yeah.
And then the initial cost estimates for the hack
Yeah, those were
were way off the mark,
way off the mark.
which shows you just how hard it is to
Which shows just how hard it is.
Which
Shows just how hard to predict these things.
to predict the fallout from these
Yeah.
kinds of attacks.
Yeah. It's almost like...
It's like trying to calculate the damage from an earthquake
Yeah, or like a...
before the aftershocks have settled.
Yeah, a wildfire.
Right.
Something that just
That's
keeps
it.
spreading.
So Dr. Malhotra defines cyber risk
Yeah.
as anything that affects
Yeah.
the confidentiality,
Yeah.
the availability, the
Yeah.
integrity
Oh, that's key.
of information in
Olives
cyberspace.
of information security.
And here's where things get really interesting.
Okay.
He argues that cyber risk is inherent
That's a good point.
in everything we do online,
Yeah, I mean, think about it.
including finance and economics.
Yeah, everything is online.
So even things like
Yeah.
stock markets and online banking are inherently vulnerable.
Your bank account, your...
Makes you think twice about clicking that buy now button.
Yeah. I mean,
Right.
you're trusting them with
It really does.
so much sensitive information.
Yeah. So think of it this way.
Yeah.
Financial markets, transactions, everything
It all relies on digital systems these days.
digital systems these days.
So,
In a sense, many financial risks
a lot of them.
are actually cyber risks in disguise.
Yeah, they are.
Okay. That's a bit of a mind-blowing
It is. It's
a realization.
It's a whole new way to think about risk.
It is.
It isn't.
And that's where cyber insurance comes in, right?
Yeah, that's where it is.
But it feels like the industry is still
Oh, it's
figuring things out.
It's the Wild West out there. I mean,
It
there's
really
a
is.
lack of
a
standardization.
relatively new field.
Policies are customized for every client.
Seeing a lot of challenges.
It's incredibly difficult to assess these
Right.
constantly evolving cyber risks.
Which brings us to something Dr. Malhotra calls
Okay.
the Cyber Finance Trust, Troika.
Oh, yeah.
Did he just make that up?
He did.
It sounds like something out of a spy movie.
Yeah, he's got a flair for the dramatic.
He does. But it's really
Brilliant way to look at it.
a brilliant way to look at
How these three elements are intertwined.
how these three elements
Yeah.
are intertwined.
Yeah, cyber activities.
Huh?
Whether it's a hack or just an online purchase.
Just our activities.
Ultimately create or destroy economic value,
Create or destroy economic value,
right?
right? Like the stock price of a company
Exactly.
plummeting after a major data breach.
There you go.
And finance provides the scorecard.
So finance provides the scorecard.
Yeah, tracking that value through
Tracking that value.
things like stock prices, and
Yeah, through things like stock prices and
asset valuation.
asset valuations.
But underpinning both cyber and finance
But underpinning both.
is trust.
Cyber and finance is trust.
We trust the software we use,
We trust
the financial institutions we deal with,
the software we use, the financial institutions we deal with,
even the websites we visit.
even the websites we visit.
Without that trust,
Without that trust, the whole system becomes incredibly fragile.
the whole system becomes incredibly fragile.
Oh, yeah.
It's like a house of cards.
Right.
One wrong move And the whole
Like
thing
one wrong move,
collapses.
and the whole thing collapses.
And I guess in the digital world, that wrong move could be
It could be anything.
something like clicking a phishing link or
Downloading a compromised app.
downloading a compromised app.
Right.
Right.
Who knows what else?
Exactly.
Dr. Malhotra even points out that
Dr. Malhotra even points out
something as simple as
that's something.
a poisoned software update
As simple as a poison software update
could create worldwide cyber risk.
could create worldwide cyber risk.
I mean, that's
That's how interconnected everything is.
how interconnected everything is.
Wow, that's a
Yeah,
that's a staring thought.
It is.
So we've got cyber risk tied to finance,
Right.
built on this foundation of trust.
Which can
Sure, crumble in an instant.
crumble in an instant.
But how is this different
That's a great question.
from the kinds of risks
Yeah.
Wall Street has been dealing with
Yeah.
for decades?
They have models for everything.
I mean, they've got models for everything.
well,
right?
they think they do.
Right.
One big difference is transparency.
Two.
Companies often downplay cyber attack losses
We're dealing with a lot of
in their public filings,
unknown.
making it really hard to get a clear picture
Right.
of the true impact.
Absolutely. And cyber risk
Is
fundamentally different
We're dealing with a lot of unknowns.
from traditional financial risk.
Yeah, and
Right.
cyber risk is fundamentally different from traditional financial risk.
Let's start with the zero trust principle
Okay.
in cyberspace.
Yeah, in cyberspace.
You can't assume anything is truly secure.
You can't trust anything.
Everything is potentially compromised.
Everything is potentially compromised.
It's almost like a paranoia
Right. It's like
built into the system itself.
you have to assume
Right.
that everything is already compromised.
And then there's the interconnectedness of everything.
Right. And
One vulnerability,
that's what makes it so scary.
like that bad software update we talked about,
One little
can trigger
idiot.
a chain reaction across entire systems.
an entire system.
Remember that old saying,
Yeah.
for want of a nail,
Oh, yeah.
the kingdom was lost?
For want of a nail, the shoe was lost.
It applies perfectly.
The horse was lost. The rider was lost. The battle was lost.
To cyberspace.
The kingdom was lost.
So it's like a digital domino effect.
It is a domino effect. And then
And fun.
and then there's the human element.
Can't forget
Yeah.
the unpredictable human element.
Oh, the humus.
Traditional financial models
Always messing things up.
often overlook this,
Right.
but cyber risk
Because they don't know how to model human behavior.
is heavily influenced by how people behave,
Exactly.
clicking on phishing links,
And you can't predict what a human is going to do.
falling for scams,
Yeah.
using weak passwords.
Exactly.
Humans,
The weakest link.
always the weakest link.
Right,
Okay?
every time.
It's not just algorithms and data.
Right.
It's about psychology
It's psychology.
and human behavior
Emotion.
that makes things a lot more
irrationality.
complex.
It's a mess.
And just when you think you've got a handle on things,
Right.
cyber risk
And it changes.
evolves.
Yeah, it's constant.
It's constantly changing,
evolving.
making it even harder,
Mutating.
mutating,
To predict.
and model.
So it's like a virus.
So if traditional financial models don't quite cut it,
Right. They just
what are we left with?
don't
How do you even begin to measure
capture
the risk of something
Yeah.
as complex and unpredictable
Yeah.
as a cyber attack?
What do we do?
That's where we start to explore
Right.
the limitations of something
Hit me with it.
called VAR,
Okay.
or value at risk,
VAR.
which is a tool
Comes out.
commonly used
Struggling with that.
in finance.
Concept in finance class.
Oh boy, VAR.
Yeah, it's a
I remember struggling
bit of a head spinner.
with that concept in finance class.
It is.
It's a bit of a head spinner. Can you break it down?
I'll try to.
For those of us who aren't math whizzes.
Make it simple.
Please.
Okay, so
All right.
put simply,
Yeah.
VAR is a way to estimate
Okay.
potential losses
Potential losses
over a specific time period.
over specific time period.
Imagine you're looking at
Okay.
a portfolio of investments.
So like a worst case scenario.
VAR would tell you the maximum amount you could potentially lose
Calculator for it.
with a certain level of confidence
Ripley.
over a given time frame.
You can say that.
So yeah.
But here's the catch.
Okay.
VAR relies on this assumption
There's always a catch.
that losses
Right.
follow a normal distribution.
It assumes that,
That familiar bell curve you might remember
losses follow.
from statistics class.
That normal distribution.
Right.
That familiar bell curve.
But cyber risk,
You might remember from statistics class.
with its interconnectedness
Right.
and human element, but often doesn't follow
cyber risk
Like-
with its interconnectedness and human element.
predictable patterns.
Often doesn't follow those neat, predictable patterns.
Those bell curves
No,
don't really apply here.
more like a roller coaster.
A roller coaster with unexpected twists and turns.
With unexpected twists and turns, yeah.
And that's why using
On
VAR,
Using VAR for cyber risk can be
cyber risk,
misleading
can be misleading.
because it might not
capture-
capture those rare
Those rare extreme events,
extreme events,
the
so-called black swan
Events.
that can cause
the most damage.
the most damage.
It's like using a map of a calm lake to navigate a raging ocean.
Ooh, I like that one.
Right.
That's a good one.
Remember the
It's
2008
a good analogy.
financial crisis?
Remember the 2008 financial crisis?
VAR models.
VAR models
Massively underestimated.
massively underestimated
Potential.
for such a
Such a catastrophic event.
catastrophic event.
They didn't account for
They didn't account
how interconnected the financial system was
for how interconnected
and how one failure could trigger
the financial system was and how one failure
a domino effect.
could trigger a domino effect.
Right.
Okay, so relying solely on VAR for cyber risk
Yeah, so relying solely on VAR for cyber risk could give you
a false sense of security.
a false sense of security.
Yes.
Which is,
The dangerous.
it's not that VAR is completely useless.
Right. It's not that VAR is useless.
We need to
It's
understand its limitations.
You need to understand its limitations.
Especially in a domain as complex and unpredictable.
Especially as
cyberspace.
domain
We need to acknowledge
as complex and unpredictable as cyberspace.
the concept of
Right.
model risk.
We need to acknowledge the concept of model risk.
The risk of
The risk of using the wrong tool for the job.
using the wrong tool for the job.
Yeah.
Model risk. So it's like
You click
trying to measure the
Which-
temperature with a ruler.
trying to measure the temperature with a ruler.
Right. Using a model
That doesn't
accurately capture the situation.
That doesn't accurately capture the
May
situation.
lead to bad decisions
Can lead to bad decisions.
and potentially disastrous consequences.
And potentially disastrous
And
consequences.
the limitations
Right.
of traditional VAR methods
And limitations of those traditional VAR methods
become very obvious
become very obvious
when applied to the world of cyber risk.
when applied to the world of cyber risk.
So if VAR isn't the magic bullet,
Okay.
what are the alternatives?
So if VAR isn't the magic bullet, what are the alternatives?
How do we
Move beyond these limitations
beyond these limitations
and develop more robust models for cyber risk. And develop more robust models for cyber risk.
I feel like we're
Yeah.
just scratching the surface here.
Just scratching the surface here.
We are. And that's
There are other approaches.
what makes this deep dive so fascinating.
Need expected shortfall.
There are other approaches like expected shortfall
And systemic expected shortfall.
and systemic expected shortfall
Try to address the limitations of VAR.
that try to address the limitations of VAR.
Okay.
Okay, those sound intriguing.
All right.
But before we get into those,
Lay it on me.
let's
So these approaches try to kind of look beyond that worst case scenario that VAR focuses on.
okay.
They try to get a handle on those really extreme cyber events that could really catch you off guard.
Okay, so expected shortfall or ETL, does that tell you how bad things could get
Yeah,
if we do hit those black swan events
that's the idea.
we were talking about?
So VAR gives you that worst case scenario
Like what's the actual damage?
up to a certain point, but ETL goes further. It focuses on what happens beyond that point.
So instead of just knowing there's a cliff, ETL helps you see how far down it goes.
Right in that tail of the distribution
Kind of terrifying, but good to know.
where those really extreme events live.
Right.
Yeah, it gives you the average expected loss.
So it gives you the average
If those events that VAR might miss actually occur,
expected loss. Okay.
it helps you get a better grasp on the potential damage.
So are we ditching VAR and using ETL for all of our cyber risk modeling now?
Well, not so fast.
Okay.
ETL has its limitations too.
Of course it does.
It gives you that average expected loss,
Right.
but it doesn't tell you the full magnitude of how bad things could really get
Right.
in a worst case scenario.
So it's like knowing the average depth of the ocean, but not accounting for those crazy deep trenches that go miles down.
Yeah, that's a good way to put it.
Okay.
We need to consider other approaches as well, like systemic expected shortfall or SES.
Right. Another acronym. Lay it on me. What makes SES different?
So SES takes that interconnectedness we were talking about into account.
Right.
It looks at the potential for one cyber event to trigger a cascade of failures
Oh.
across multiple companies or even entire systems.
That's a scary thought, but also really important,
Right.
especially when you think about critical infrastructure like power grids or financial systems.
Exactly. And this is where our deep dive gets really interesting.
Okay.
Dr. Malhotra's work takes us beyond traditional finance and into some cutting-edge stuff. Bayesian statistical inference.
Ooh, that sounds fancy.
Yeah.
I'm intrigued, but also a bit intimidated. Can you break it down for me?
Yeah, so it's a different way of thinking about statistics and probability.
Okay.
Instead of just looking at past data and assuming things will continue in the same way,
Right.
which you know doesn't always work with cyber risk.
Yes, especially with cyber risk.
Bayesian inference lets you incorporate prior knowledge and beliefs into your models.
So it's like, instead of just looking at the weather data for the past week, you also consider things like, I don't know, the Farmer's Almanac, or what your grandma always said about predicting rain.
That's the gist of it.
Okay.
It's a way to bring in expert opinions and those gut feelings that can be valuable in a field as complex and ever-changing as cyber risk.
So you're not just relying on numbers, you're blending them with human intuition and experience.
Exactly.
That makes sense, especially given all the unknowns we've been talking about.
Yeah.
But you said Bayesian inference is cutting edge. Is it actually being used out in the real world, or is it still mostly theoretical?
It's gaining traction as we get better at understanding cyber risk.
Okay.
And as computers become more powerful, Bayesian methods are becoming increasingly practical.
So it's like we finally have the tools to catch up with the complexity of the problem.
Precisely. And this is really just the beginning.
Oh, wow.
There's a ton of research happening right now exploring alternative risk modeling approaches that go beyond the limitations of those old school financial models.
Right.
Bayesian inference is a big part of that.
This is really fascinating stuff.
It is.
But what does it all mean for those of us who aren't mathematicians or cybersecurity experts? How do we navigate this increasingly risky digital world? What are the key takeaways here?
Okay, first, don't panic.
Okay.
Awareness is key. Just understanding the unique nature of cyber risk is a huge step in the right direction.
Knowledge is power, as they say.
Second, don't just blindly accept the results of models,
Right.
especially those designed for traditional finance. They might not be the right tools for the job. Ask questions, dig deeper, and don't settle for easy answers.
Be skeptical. Be curious, like a good deep diver should be.
And finally, embrace continuous learning. The cyber threat landscape is constantly evolving, so you have to keep learning and adapting if you want to stay ahead of the curve.
So don't just go through the motions of your cybersecurity training. Really engage with the material and think critically about how it applies to your own situation.
Excellent advice.
Thank you.
For those who want to dive even deeper into this topic, I encourage you to check out Dr. Malhotra's full thesis. The SANS Institute is another great resource, and there are some fantastic cybersecurity news outlets out there that can keep you up to date on the latest developments.
Those are great suggestions. And here's a final thought to leave you with.
Okay.
In this digital age, where the line between the physical and virtual worlds is getting blurrier every day, how do we create models that truly capture the complexity and unpredictability of cyber risk?
That's the million-dollar question, isn't it?
It is.
And it's one that will continue to challenge us for years to come.
Right.
But by acknowledging the limitations of our current tools and embracing these new approaches, we can start to build a more resilient and secure future.
It feels like we need a whole new language to even talk about risk in this digital age.
You know, that's not far off. We're still using frameworks and terminology developed for a world of physical assets and traditional financial markets.
Yep.
Cyber risk challenges those paradigms in some really profound ways.
It's like trying to explain the internet to someone who's only ever used a rotary phone.
Exactly. And that's why this conversation is so important.
Right. By acknowledging these challenges and pushing the boundaries of our understanding, we can start to develop more effective ways to assess, manage, and maybe even insure against the unknown.
So it's not about eliminating risk altogether.
Right.
Because, let's face it, that's impossible in a world as complex as ours.
No.
It's about understanding the nature of the risk,
Yeah.
knowing where our blind spots are,
Right.
and coming up with strategies that allow us to adapt and thrive in the face of uncertainty.
It's about getting comfortable with being uncomfortable.
Right.
Accepting the fact that we won't always have all the answers.
And that's kind of exciting, right? The constant challenge, the need to keep learning and evolving our thinking. The potential for innovation cyber risk might keep us up at night,
Yeah.
but it also pushes us to be more creative and resourceful.
Absolutely. And on that note, I think it's time to wrap up this deep dive
Okay.
into the world of cyber risk and cyber insurance modeling. We hope you've learned something new.
Yes.
And maybe even had a few aha moments along the way. Remember, in the digital age, knowledge is your best defense. Stay curious, stay skeptical, and stay informed.
Well said.
And until next time, keep exploring, keep questioning, and keep diving deep.
Yeah.
It's crazy to think, I used to think about cyber risk as just, hackers stealing credit card numbers or
Yeah.
embarrassing emails or whatever. But
Yeah.
this has been such a good deep dive because now I'm thinking about it as like
It's so much bigger.
this invisible force that touches every
sun.
aspect of our lives.
Yeah, and it's constantly
Yeah, it's always changing.
devolving what might have been considered a major cyber attack
Right,
5 years ago might seem almost insignificant today.
right. And that makes it even harder to figure out.
Yeah, the scale and sophistication of these attacks are
How to measure the risk
increasing all the time.
and what steps to take to protect ourselves. It's like
Yeah, it's like trying to hit
trying to hit a moving target
a moving target in the dark.
in the dark.
But that's why it's so important to keep learning and adapting. We need to be flexible in our thinking
So it's not about finding
and open to new approaches like those we've discussed today.
that one perfect solution, that magic bullet that will make us immune to cyber attacks.
Right. There isn't a silver bullet.
Okay.
It's about layers of protection, constant vigilance,
So it's more about
and a willingness to change our behaviors and adapt to the evolving threat landscape.
understanding that there isn't that silver bullet.
Right.
It's more about like layers and changing our behaviors.
Yeah.
Being
It almost feels like we need to develop a whole new mindset,
vigilant.
a new way of thinking about risk in this digital age.
Yeah, I think you're right. We can't rely on the old ways.
We need to be more proactive, more aware,
Of doing things, we need to be more proactive. Right.
and more willing to challenge our assumptions.
Aware.
Yeah.
And maybe a little bit more paranoid.
Perhaps a healthy dose of paranoia isn't a bad thing in the digital world, but more than that, I think it's about being informed and empowered. The more we understand about cyber risk,
Yeah.
the better equipped we'll be to manage it and make smart decisions.
Well said. And that brings us to the end of our deep dive into cyber risk and cyber insurance modeling. This has been really, really fascinating.
It has been a pleasure diving deep with you.
Likewise.
Hopefully our listeners feel the same way.
And if you're feeling inspired to learn more, remember those resources we mentioned.
Yes.
Earlier, Dr. Malhotra's thesis is a great place to start.
Absolutely.
And the SANS Institute has a wealth of information on cybersecurity. And of course, stay tuned to
And there's some great
reputable news sources to stay informed about the latest
cybersecurity news outlets out there as well.
developments in the cyber world.
Keep yourself up to date.
Remember, knowledge is power. The more you know about cyber risk,
It is.
the better prepared you'll be to navigate this complex
Absolutely.
and ever-changing digital landscape.
It is a jungle out there.
Until next time, stay curious, stay safe, and keep on diving deep.
Well said.
See you next time.